Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. You're listening to the Financial Survival Network. I'm Kerry Lutz on 1590 WPSL. So it looks like the wheels are coming off the bus. The system is fracturing. Confidence is diminishing, or perhaps it's disappearing all over the globe. We got Danielle Park on the line to talk about the crumbling financial system now. Danielle, welcome back.
Hey, thanks, Kerry.
So, Cyprus, we've been talking about it till we're blue in the face. I've got emails coming in saying, not such a big deal. Who cares about Cyprus? Not many people, not that much money. What difference does it make? Well, what difference does it make, Danielle?
I think it strikes at the very heart of capitalism and trust, which is the word that supports credit. You know, the whole foundation of commerce in the world is based on a premise of a banking system where people can do transactions in support of commerce and actual legitimate day-to-day activities, not just speculation, but real banking in support of global trade, etc. All of that comes down to a banking system where deposits are held sacrosanct, where you have, the risk in the system is borne by those who provide the capital for that purpose. So the bondholders and the equity holders, those are the ones who are supposed to take hits when institutions go wrong. And in this example, we have a mirror image of what we saw with the MF Global fiasco, for example, in the securities accounts. Remember when MF Global was able to rehypothecate? We were talking about this several months ago, Kerry.
Sure.
They were able to actually misuse and abuse client deposits and actually lose those deposits in service of their own risky activities. So that was a fatal blow to the trust of the security system, and especially in the commodity space. And now we have an example of that happening within a domestic banking system. And I think both of them are the death knell of the financial system the way it has evolved in the last few years.
No doubt. I think you're correct. If you remember, in the good old days, in the 20s and 30s, when they built a bank, they'd use this real intense, heavy-duty looking architecture, Gothic or whatever, Beaux-Arts, and you had these columns and marble and a humongous safe. Everything was supposed to ooze safety. Your money is safe here. And now, basically, these banks look like Burger Kings, pretty much. The architecture, very modern. None of that security is imparted, and probably your money would be safer on a McDonald's gift card right now than it is in a lot of these Southern European banks.
Yes, and I think, it's been a chipping away at the rule of law, and you and I have talked about this over the years. And the fact that people perhaps in America or Canada today don't appreciate how significant this is to the world economy and to the world banking system, I think is just endemic of the complacency which has developed in the regular population over here, where we've sort of taken our credit pills and gone to sleep, been content just to buy things on debt, and as long as we could get stuff, didn't really ask a lot of questions, didn't really worry about the monster that was becoming our financial system. And we've paid the price since 2008 in various ways. We're still paying the price today because our central banks and governments have continued to take on debt to support this, antiquated system which should have gone bust in 2008. We have been funding it. So even though it has taken on the appearance of some kind of recovery or stability, in fact, it has been, weakening our financial integrity and strength since 2008. And so it's starting to pop out in places. The irony of this system is that, first of all, people were touting the miracle of the global economy a few years ago and how, international trade was such a phenomenon. It was pulling all these parts of the world out of darkness and out of poverty. But the reality is that the other side of that also is true. When it was done on a financial system that became increasingly over-levered, and then bankers who went literally anarchist, like right off the rails, no governance, no respect for law, feeling that they could set all the rules, that the governments were in their pockets, that they controlled the regulators. All of that became, the monster that it became. And now the fact that people think that, for example, the U.S. can escape the downturn that's already begun throughout the rest of the world, or that we can decouple from this nightmare that's happening in the Eurozone, I think is complete naivete. And the irony is that no matter what happens here at this stage, every aspect of this comes back to the real people. So you saw, for example, the Cameron government in the UK this week, their big announcement to Cypriot deposits was, don't worry, if there's any UK people who have money on deposit in Cyprus banks and they lose some of that capital because of this new tax that's being proposed, the UK government will make you whole. Who's the UK government? Taxpayers. So this is just another way taxpayers can bail out money that eventually goes into the coffers of the bankers and the risk takers who have yet to take their lumps.
Yeah, couldn't be more spot on, Danielle, because it's this sociopath, these masters of the universe who think that the rules don't apply to them. And so far, you know what? They've been right. Yes,
they've been right. Absolutely. Look at that fiasco we saw before the Senate, the J.P. Morgan scandal at the end of last week. Were you watching that?
Yeah, and nobody was responsible. It was everybody else's fault, and nobody knew the risks that they were taking. But if you read Jim Rickard's book, and I don't consider myself any kind of authority on these exotic derivatives, hybrid, whatever they are, I don't get them. But what I do understand is that to think that risk, if they, on one side of their book, will cancel out risk on the other, is absurd. These things are inherently risky. That's why Warren Buffett called them weapons of mass financial destruction.
Yeah, and it's all... it's because it's become so disconnected from real people and real reality. So you get these ivory towers of a handful of people who convince themselves they're genius. This is textbook, right? We saw this in when Genius failed, when the long-term capital debacle started. That was one of the earliest bailouts that started us down this destructive tangent. And it has just continued to pick up players and people, and the mentality has become one of we are better than, bigger than, and it's all, if you ask me, it's perfectly personified in the manner and actions of Jamie Dimon. I mean, there's many examples, but because in the catastrophe of 2008, he was one of the players who came out as if he was exonerated, which was a farce in itself, because the banking standards were simply set aside, all the rules watered down, he was given free money, and everyone decided he was a genius. What happened was he became an even larger monster since then. And so all the free money that's been flowing from the Fed in the past few years has emboldened them, and they went on with their even more risky behavior and even greater self-confidence, which was all unfounded. The idea that he was an exceptional manager is a joke. And yet he's been lauded and paid so handsomely for his genius and brought in as counsel to, the government, and to even Barack Obama was, calling him such an excellent, confidant and all this stuff. This is why the world is in a total firestorm at the moment. The breaking down of rule of law, of fiduciary duty, of intelligent divisions between conflicts of interest, the moving that all into one big cesspool ball where everyone calls their own shots and the rest of the people are faceless, like who's paying? Oh, don't worry, the taxpayer, the government will pick up the tab. No, the individuals who you are breaking the back of with these, extreme behaviors, they're the ones who are suffering. That's why the global economy is continuing to weaken. And, on a bright note, I think that the people of the world are more aware of this now than they've ever been in history. And I think that that's largely to do with the enlightenment possible through the Internet. And you and I, in our humble little way, and others who are constantly providing reality and information to counteract the nonsense that's being published by mainstream, outlets, medias, financial institutions, I think that we're able to disseminate enough truth or call bullshit enough on some of the stuff that's being perpetrated, that individuals are actually waking up slowly, but more than at any other time.
Hey, and I don't know if you caught the hearing with Eric Holder a few weeks ago, but basically he said that these criminals in the financial system are too big to jail, that we really can't afford to put anybody in jail for what happened in 2008 and 2009 because it might cause the system to collapse. So where does that leave us?
Well, and this whole nonsense that's been going on for a long time now, where they are allowed to pay a fine without admitting any wrongdoing, is heinous. It's outrageous. I mean, you know very well in your work as a lawyer, I entered pleas of guilty for people in various proceedings before criminal courts and even administrative tribunals, and you always had to admit guilt on something before entering a plea. You could never just offer to pay a fine if you didn't enter a plea to something in particular, right? So that was the very essence of the plea bargain, an admission of wrongdoing. And if you were ever trying to enter a plea and someone sort of tried to make some excuse to the judge who was hearing you, right, at that particular time, if the client tried to say, well, actually, Your Honor, he would just stop the whole proceeding and throw everybody out in the hall and say, either this is a guilty plea or it's not, right?
Yeah.
There's a reason we have that in our legal system. It's so that people will bear the mark of their wrong choice, and others will be aware when dealing with them, or at least have the potential to be aware that they are not particularly, trustworthy, or perhaps have had previous indiscretions. That's all part of a system of honesty, transparency, and making atonement. So the fact that we went to this, expedited process, and the argument being, well, the regulators don't have the financial resources to fight because the big banks are so big and so wealthy. I mean, clearly, there's no alternative but to break up these institutions into smaller parts, to, make them go back to cutting the taxpayer line of credit. They should not be able to be dependent on taxpayers for liquidity when they get into crisis. They have to fall on their own sword. And doing those basic things will go much farther than thousands and thousands of pages of additional regulation.
Yeah, Dodd-Frank is not going to stop the next financial collapse, the next financial disaster. And I just want to go back to history, because in December of 1931, a bank in New York called the Bank of the United States was allowed to fail. It was the largest bank failure in American history, over $200 million in deposits, which was a lot of money back in the 30s, probably the equivalent of several billion now. As a result of the Fed not rescuing them, caused massive bank runs. Over 9,000 banks in the United States failed during the Great Depression. By the ECB and the government of Cyprus trying to stick it to the depositors, they're repeating that very same mistake. It's going to have the same results. And like you said, we can trace the whole thing back to corruption. Corruption of the system, corruption of the judicial system, corruption of the government. And the only thing keeping you aware and understanding what's going on is the internet and sites like Danielle, mine, and so many others out there. Otherwise, you wouldn't have a clue why this is happening.
Yeah, so that's a bright spot. And also, I go back to, this is unfortunately how humans have gone throughout history in various cycles. So we're not like we're into new territory here. The scale of it is bigger than ever because the leverage that was available through derivatives was bigger than ever before. We hadn't essentially invented the scale of the derivative network that we have today ever before. So this makes the magnitude of this larger. But the corruption that's been plaguing the banking sector, the hubris of bankers, they have throughout history, they've run money for criminals and various terrorist groups. There's
let's face the facts.
Story after story after story. So part of the argument in the Cyprus banking system is, that their banks became 8 times the size of GDP in Cyprus because they allowed this huge influx of foreign deposits, and they were an offshore. They were making a deal with the devil. They were saying to all the drug lords and mafioso from Russia and various places, come and put your deposits here. We'll give you tax haven status. We'll pay higher deposit rates than you can get in other places. And as a result, they, had some knockoff benefit, no doubt, jobs in the financial sector and that sort of thing in their domestic economy, but they were desperate for capital, right? So they attracted all these miscreants. And now the justification for overrunning the rule of law is, the Germans say, well, a lot of those deposits are questionable. Well, no. The answer is not to go and break the rule of law and break the trust of the entire banking system because you think you have a few bad players. The answer is, if you're serious about cracking down on money laundering, develop some actual rules that filter where deposits come from. Go back and tighten up your rule set in terms of how money's allowed to flow into your country. That's how you correct that. But don't try and take deposits from everybody under some misguided notion that, you have to harm everyone to harm a few. It's crazy stuff. So I think it's a fascinating little microcosm. I knew that the overconfidence, the supreme belief that the Federal Reserve would be able to fix all blemishes and calm all storms and keep stocks up forever and a day. I knew that was the most ridiculous thing that people could think in this environment, but you never know exactly which of many little risks or global problems will be the final tipping point. I think this has the potential to do that because it calls into question, is Cyprus going to leave the euro? If it does, it's the turd rolling effect that's been going on for years over there now where, bad debts of various countries and Greek debts in this case, were a huge part of the problem in Cyprus. They've been moving this stuff around and pretending that it wasn't actually turds when in fact it was. Mm-hmm. So now we're back to realizing that, and I think the strengthening U.S. dollar is a trend that we have been predicting for the last while, and it continues. You see huge inflows again into U.S. Treasuries, and all of that is just going to make U.S. earnings harder for companies to continue to maintain because the U.S. Multinational companies, they benefited from a weak dollar for many years, and now that the flows are coming back over, that is translating back to weaker earnings for multinationals. So the S&P is vulnerable just on an earnings basis because of the currency flow that is coming from this. But the global economy is definitely connected in all of this, and the global banking system is connected in all of this. So I think that we will at some point get some reality back into the wild optimism that has prevailed in the United States over the last 6 months in terms of capital market participants.
Yep, I agree with you. I think all very valid and excellent points. And it's all a question of what do you do as the individual? Do you wait around for the thing to come cascading down, or do you take preventative action so that you're not a victim as well?
Well, I think that people have to take preventative action because if you're waiting around for anyone in the financial services industry, generally speaking, to give you any sort of indication of concern or that you should do anything to protect yourself, you're going to be way late. If you're waiting for any politician to ever forecast an incoming recession, you're going to miss, every possible opportunity to avoid it. So you really have to try and keep your eye on the things that matter, and that's, actual domestic demand in the world. That's things like commodities. That's things like copper breaking today below 350, which is the support trend it's maintained since the '09 low. A lot of things around the world have broken the cyclical support that began off the bottom in the last recession in 2009. I think those are all red flags. Anyone concerned about risk to money should really try and piece together a plan now, because with the amount of leverage that's in the world, in world markets, and the amount of thin participation we've seen, once the crack finally comes, you see that everyone is going to try and race for the exits at the same time, and that's traditionally the worst possible time to be trying to figure out a plan.
You got it. You never want to be panicking. You want to have planned and thought about it in advance so that when the inevitable happens, you are ready. Well, exactly. On that note, Danielle, jugglingdynamite.com, go to financialsurvivalnetwork.com, either one. We will talk with you again soon, Danielle. It's been fun, and it's getting interesting.
It sure is, Kerry. Keep well.
Hey, you too. This show is sponsored by Sandstorm Gold, a gold streaming company. They provide capital to their mining partners that helps get mines built and into production. Sandstorm can then purchase a portion of the production at a low fixed price per ounce. This way, Sandstorm avoids the risks and headaches of exploring, permitting, building, and operating a mine, but still gets much of the benefit at a greatly reduced risk. There's no capital calls or obligation to invest additional sums. Sandstorm leaves the job of building and operating the gold mines to its partners while using its expertise to supply them with financial support. Nolan Watson and David Oram, Sandstorm's founders, were the first two employees of Silver Wheat, which is the first metal streaming company and now the largest in the world. Since 2009, Sandstorm has built an 8 gold stream portfolio with 3 NSR gold royalties. Its market cap is over $1 billion, and it spun out a sister company called Sandstorm Metals and Energy. It's listed on the TSX Venture. Symbol is SND. Sandstorm will purchase approximately 30,000 ounces of gold in 2012, growing to over 60,000 ounces by 2015 at an average cost of just $400 per ounce, while the market price closes in on $2,000 per ounce. Sandstorm Gold trades on the New York Stock Exchange under the symbol SAND and on the Toronto Stock Exchange under the symbol SSL.